We're joined by Richard Jerram, Chief Economist at Bank of Singapore. Welcome to First Look, Richard. And first of all, I wanted to talk about Singapore's number, 10%. Generally a little bit off where the general consensus number was. But is this where were you looking for annualised growth to be? And exports seem to be showing particular strength.
Yeah, it's quite something when 10% is a disappointing number, isn't it? I think the point to remember about this is that you are bouncing from quite a soft figure in the fourth quarter, and Singapore's GDP is a tremendously volatile number. I mean, for the full year, you're still probably looking at 3, maybe something a little bit above 3. So you really don't want to extrapolate this number too far into the future.
I see. But if we're looking at Japan's first quarter, should we be extrapolating that into the future as well? Because, of course, it did beat and forecast 4.1%. You think that's actually the peak for the year?
Yeah, I mean, it was a good number. It was better than expected, and they revised up the previous quarter as well. But I think the problem is, as your previous report said, that partly it's been supported by government reconstruction spending. And I think that's going to fade out as the year progresses. And then by the end of the year, you're going to be stuck again in an economy with really no internal dynamic at all.
And of course, Europe has got to be a bit of a concern. It's a global concern weighing across the stock markets globally. But how much of is it a concern for the economic growth of Japan? Of course, they have a lot of exporters focused on Europe. But so therefore, should it be something that we're worrying about?
Well, I think you've got to worry about Europe in the case that you have an absolute disaster and you have a Lehman sort of freezing of the global financial system and trade. I mean, that really hurt every country across the Asian region. But I think the reality of the past 6 months is that Europe's basically in recession and the rest of Asia is in fact doing fine because there's a lot of growth internal to the region. I think for Japan, exports to Europe are not a big part of the economy. Exports overall are only about 1/6 of the economy and exports to Europe are about 1/6 of that. So it's not going to have a big impact on Japan. Really what they need to do is either do something to get the yen down or to find some means of revitalizing the domestic economy. And they seem fairly short of ideas, to be realistic, on both of those things.
Because that's sort of where the repercussions of Europe are coming in, isn't it? The yen continually being driven higher because it's seen as the so-called haven trade, seen as an area of safety. What, therefore, do you want to see the Bank of Japan to do to try and ease the yen? Do we need more stimulus? Do we need it to be tougher, more aggressive?
Well, I think the problem with the stimulus they've delivered so far is that you can see it's tremendously reluctant, and we know from the past that they'll take it away as soon as they possibly can, if not before that. So there's no real sense, as there is in America and maybe in England, and certainly in the UK, that this is going to lead to an inflation overshoot, a deliberate inflation overshoot over the medium term. So I think Japan's still stuck in the situation where it has the tightest monetary policy of any of the developed economies. And I think credibly it's very hard for the BOJ to reverse that because they've got 20 years of history of being too tight.
So it needs to really gain credibility in terms of what monetary policy it's going to bring to the table.
Well, I think the problem is they can't gain credibility because they have so much of a weight of history, and credibility is largely not related to what you say you're going to do, but also to what you've seen to be done in the past. And I think the only way really you can have a credible monetary ease in Japan is by doing something to change the BOJ law, restrict the independence of the BOJ, and force them into a different route, and the government still seems quite reluctant to go down that path.
So we're needing some shift in terms of policy from the government, but also consumer spending. Of course, we actually saw that give a bit of a boost to the first quarter figures for Japan, particularly on the back of what seemed to be government subsidies. Does the government need to act there as well, Richard, in terms of extending these subsidies? Because it looks as though they might take them away come August.
Yeah, they're in a bit of a bind, really, because as you say, the subsidies work quite well when you bring them in, but of course all you're really doing is you're front-loading demand, and when the subsidies stop then demand drops away. And they have the similar problem, which is that the public finances are so bad that in fact they're talking about increasing the sales tax, which by implication would be something of a drag on people's real spending power as well. So I think they can offer these short-term subsidies, but they think public finances are so bad that they can't do anything more lasting.
So government situations, you're wanting some policy change from the government in general, whether it's in look for the Bank of Japan and indeed in a bit of a bind, whether it be extending those subsidies. Richard Jerram, Chief Economist at Bank of Singapore, thank you for all your views today on Singapore and indeed Japanese GDP.